this is Trend Trader. Welcome to our regular weekly market analysis and trading update. And as usual, we're going to start with our risk disclaimer. Everything that is shared on this YouTube channel does not constitute financial advice. If you happen to use any of the material that is shared here, Trend Trader will not be liable for any profit or losses that result from the use of the material that is presented here. Okay, thank you. And also, we would like to thank everyone who have already subscribed to the channel, and would like to ask those who haven't subscribed to subscribe, and also to click the bell notification so that you can receive notifications whenever we upload a video. And also, if you like the material that is presented on this channel, please click the thumbs up button so that it helps the YouTube algorithm to spread the video across many people. Thank you. Okay, so in this week we have a very short list of companies that we'll be looking at. The first company that we are looking at this week is Alviva. Okay, Alviva, as you can see here, is also known as Pinnacle. It's an IT or ICT company. It got our attention when we saw that it broke above the 200-day exponential moving average, which is one of our buy signals. So we watched this market as it broke last week. We saw that yesterday it's still above the 200-day moving average, and the volatility is low as well. So we're looking to buy this stock, Alviva. We're also looking at HCI Hosken. This is the company that owns ETV, among other group of companies that are underneath this holding company. Same thing, HCI has been trending lower for quite some time now. A lot of value has been lost in this company. So it seems like it bottomed in March 2020, but the bottom, the lowest point was around May 2020. And then it came back, it tried to find support above the 50-day moving average, but it failed. It went lower a bit, but as you can see, this lower is higher than the previous lower. And then since the beginning of August, it's been trading above the 50-day moving average, but still below the 200-day moving average. Until last week, it broke above and closed. As you can see here on the volume indicator, it broke above the 200-day moving average on a higher volume than usual. Also, the volatility is lower, so it will be possible to have a tight stop on this position. We're also looking at Mondi PLC. Mondi PLC has been trading up and down the 200-day moving average. It has been erratic for quite some time, but what we realized is that it looks like it's back to retest what looks like previous resistance. As you can see, the price has been trying to break above this level a number of times with some failures. And as you can see, these lows are higher than the previous low. Each low is higher than the previous low. So now it's been trading nicely above the 200-day average, and also it's been trading now above 50-day moving average. As you can see, around August, it broke above this level, but it quickly closed down, so it was a false breakout. Most of the people who bought here either had to cut their losses or they are still holding, but so far they are in the red. And then it came back in September. It broke above this resistance level. So now what you see is that it's coming back to retest this level. Also note that it's sitting at the 50-day moving average. So it's a confluence between this breakout retest and also the dynamic support. So we are also adding this company into our position with a stop below the 50-day moving average. So a close below the 50-day moving average negate the long idea. Otherwise, we will stay long for as long as the company is trading above the 50-day moving average. even if it's trading above the 200-day, but preferably it should stay above the 50-day moving average if indeed it's a strong company that intends to trend up. Another company that was brought into our attention by some of the people that we interact with, I think this came from a guy named Tabo on Twitter. This is Murray and Robert. So as you can see, it has been trending lower, a series of lower lows, and lower highs, and it's been trading below the 200-day moving average. But recently it started to come and trade above the 50-day moving average with little to no success for quite some time. But this previous low is higher than the recent low, than the previous one. The recent one is higher than the previous low. And then last week it broke above the 200-day moving average. So what we're not sure of if there are news, we saw that there have been a lot of companies that are in some merger and acquisitions that are going on. So we're not sure if Murray and Robert also has an offer of a buyout or what, but from the chart what we see is that it has broken above the 200-day moving average. So it broke out around R6.90 per share. That would have been the best place to make a buy, because that would have offered you a preferable risk to reward ratio. But now it's stretched all the way to R8.90. Well, there are two things that can happen. It can continue to trade higher, not giving you an opportunity to buy if you think that it's far from the 200-day moving average, or it can retrace and come back to retest the 200-day moving average. So if it comes back to retest the 200-day moving average, it should be coming back to an area of value. So that's the position that you're looking to take if it retraces back. But if it goes higher, you must note that there might be a bit of a resistance along this level. So how we going to play this trade? We'll wait for it to trade to see if it trades higher and reaches the resistance level around here, and then retraces back, of which then we'll buy. But if it doesn't retrace back, or it consolidates a bit around this resistance level and then break up above this resistance line, then we will buy. So it pays to be a bit patient, to wait for an entry that has a favorable risk to reward. There's nothing as a perfect entry. You can enter it anywhere as long as you can manage that position very well. Also, another company that has our interest is Stefanutti stocks. So as you can see, for quite some time, the share price was just falling from November 2018. It was downfall from there, and then it consolidated. I think it consolidated for over 2 years from here, starting in June 2019. So now we are past June 2020. So it's been consolidating for 2 years, forming a nice base. And then it attempted to break out in June 2020, but the breakout failed miserably. It came back, consolidated a bit. So now it's trying to break out again. So now this one is still in an area of value. So we're looking to buy this one. It's currently trading at 38 cents. Well, we don't really like buying stocks that is trading below R1, or sometimes some of the stock, we usually buy stock that's trading above R10. But according to the technicals, it looks like the uptrend is about to resume. So we'll be adding a position on this. Okay, as we said, the breakout, the volume is a bit down here, but as you can see, the green things, it shows that there were more buyers on that day during the breakout. So it gives us a bit of a confidence that there is an interest on the market on this stock. The other stock that has been trading higher, Transaction Capital, they give loans to the tax industry. So this one broke out the 200-day moving average in September. So we missed all that ride, but now the 50-day moving average is above the 200-day moving average. So that looks like a bullish signal. Also to note that it consolidated a bit around this level. So now the price has broke out of this range. So we would be buying this with the stop somewhere near the 50-day moving average, which is somewhat below the trading range where it was. And also just note that there's this bit of a resistance here. So we will see if the price trade and close above 24 Rand per share, that would be another bullish signal. Also, something to note, if it breaks above, we would expect the price to trade all the way up to 26 Rand 80, which was the previous high, the highest the stock has ever traded. So for a short-term profit gain, we'll be looking to take partial profit around 26 Rand. Other than that, we will just let the trade run for as long as it can. The other one that we've been speaking about is AVI. AVI is still offering a nice area of value. As you can see that it is consolidating above the 200-day moving average. So here it gives you one of the best risk to reward entry. So we still long this. And yesterday was Monday, AVI paid dividend. So we'll see if people will still be interested in this stock since they have received the dividends. But here we're talking about dividend investors. Other than that, the stock looks bullish to us. It provides a nice area of value. Therefore, we are looking to buy the stock. One comment that we want to make on the previous position that we had. So we took a position in Discovery. We took that position in July 22 this year, as it just consolidated above the 200-day moving average. So it started to trade higher and higher a bit. The highest it reached was 137 Rand per share. Then it retraced back to the 50-day moving average. And then it tried to trade a bit higher, but it failed at 134. It couldn't get past the previous swing high of 136. And last week, Friday, it closed below 125 Rand, which was below the 50-day moving average. So we had to cover our position. We posted that update on Twitter and on Facebook to say that we're exiting this position. But something that we should note, we somewhat feel like we were a bit irrational with this trade. As you can see, still trading above 200-day moving average, and the 200-day moving average is turning up a bit. But rules are rules. If we can't follow our rules, then what's the point of having rules? But Discover is still on our watch list, as we mentioned on social media, that we will take this trade once again, depending on which scenario will play out first. So the first scenario is that the trade will find support on the 50-day moving average and then continue to trade higher. The other scenario is that the price will continue to trade lower until it reaches a certain point in the 50-day 200 moving average and then continue to trade higher. Therefore, whichever scenario comes first will take us back to this position. Again, the first scenario is that it finds support on the 50-day moving average and then it continues to trade higher. The second scenario is that it continues to trade lower until it finds support on the 200-day moving average, and then it goes back and start to trade higher again. Well, the other worst case scenario, the one that we wouldn't want to see, is if the price break and close below the 200-day moving average. So that one will be a bad scenario. It's the scenario that you don't want to see. So that's it for this week. We are looking to buy Alviva, which is also known as Pinnacle these days. So we're looking to buy Alviva, HCI, Stefanutti stocks, Transaction Capital, and on our watch list we have Murray and Robert. We already have a position in AVI, and on our watch list, in addition to Murray and Robert, it's Discovery, as we've explained the scenarios on how we will play this trade, what we anticipate. And then, yeah, it's better to have a plan, as they say. If you don't plan, then you plan to fail. So we plan. If there's nothing to buy, we sit on the side with our cash. Then if there's something, we go in, we buy. And just a comment on the side, we are noting what is happening in the US with S&P 500, as we also trade indices as well. So we've been long S&P 500 after it broke at this level. We were long, and then it traded a bit up for quite some time, then it closed to lower. What we see now, this previous swing high wasn't higher than this recent swing high wasn't higher than the previous high. So now it is a bit worrying. Well, this is an index, so it can't be said that it will now, it has formed a double top, it will start crashing, blah, 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 all those things. There are many things that shows that the US market is still bullish as it can get. As you can see, the price is still trading above the 50-day moving average, which is above the 200-day moving average. As you can see, the 200-day moving average is pointing up, and maybe to add a 20-day moving average, which is the purplish line. As you can see, yesterday it touched the 20-day moving average around 3,400 points, so 3426. But also something to notice that that level is near this the last high. So now we are looking at S&P 500 futures. If it will find support either at 20-day moving average, this support level, or the 50-day moving average, and then as soon as it starts to show signs of trading up, we will take a position. Currently we don't have a CFD position on S&P 500 and Nasdaq. We only have a position on Nikkei 225 because that one is still trending higher. So yeah, we are trend followers. We're always looking for a trend. If there's a trend, we buy. Not trend, we sit on the side. So that's it for today. Please don't forget to subscribe and click on the bell notification. And thank you for coming once again.